Hello everyone and welcome back to the channel. Let's dive right into the biggest stories that shook the Web3 world yesterday. It was a roller coaster of a day, so grab your coffee and let's get you up to speed. First up, a major story that has everyone talking. The United States Securities and Exchange Commission, or the SEC, has officially approved spot Bitcoin ETFs. This is monumental news. For years, the industry has been pushing for this, and now it's finally a reality. Major players like BlackRock, Fidelity, and ARK Invest are among the approved applicants. So, what does this actually mean for you? Well, it opens the floodgates for mainstream investors to get exposure to Bitcoin through traditional brokerage accounts, just like buying a stock. This could bring a massive wave of new capital into the market and is seen as a huge step towards legitimizing crypto in the eyes of traditional finance. The market reacted with a surge of excitement, with Bitcoin's price briefly touching new yearly highs before settling down. This is definitely a story we'll be tracking closely in the coming days and weeks. Next, let's talk about Ethereum. The developers are full steam ahead on the next big upgrade, codenamed Dencun. Yesterday, a crucial developer call confirmed that the upgrade is set to be deployed on the Goerli testnet in just a few days. This is the final major public test before it goes live on the main Ethereum network. The star of the Dencun show is something called proto-danksharding, or EIP 4844. It sounds complicated, but the goal is simple: to drastically reduce transaction fees for Layer 2 solutions like Arbitrum and Optimism. Think of it as adding a super efficient data lane to the Ethereum highway, specifically for these Layer 2s. If all goes well, this could make using decentralized applications on Ethereum significantly cheaper and faster for millions of users. The successful deployment on Goerli will be a huge confidence booster for a mainnet launch expected in the first quarter of this year. Shifting gears to the NFT space, there's been a surprising resurgence in a collection many had written off. Pudgy Penguins just announced a massive new partnership with a major retail chain to launch a line of physical toys. These toys will come with a QR code that unlocks digital traits for their corresponding NFT in a connected online game. This phygital strategy, blending the physical and digital worlds, is gaining serious traction. The announcement sent the floor price of Pudgy Penguins soaring, bucking the recent downturn in the broader NFT market. It's a great example of how NFT projects are evolving beyond just digital art, building real brands with tangible products and experiences. It shows that utility and a strong community can create lasting value, even in a bear market. Now for some ecosystem news. Solana has been on an absolute tear lately, and yesterday was no exception. The network saw a record-breaking volume of transactions, largely driven by the explosive popularity of meme coins and airdrop farming on the platform. Projects like Jupiter, a leading decentralized exchange aggregator, are preparing for massive token launches, driving a ton of activity. While the network has experienced some congestion due to this high demand, it's held up remarkably well, a testament to the recent performance upgrades. This surge in activity is attracting both developers and users, cementing Solana's position as a top contender in the Layer 1 race. The low fees and high speed are proving to be a winning combination for retail users looking for action. Let's touch on the world of Web3 gaming. One of the most anticipated games of the year, Shrapnel, just released a new gameplay trailer and announced the start of its early access playtest for token holders. Shrapnel is a first-person shooter built on the Avalanche blockchain, and it's aiming to give players true ownership of their in-game assets. The new trailer showcased stunning graphics and intense tactical gameplay, generating a massive amount of hype on social media. This is a big moment for blockchain gaming, as it aims to prove that a Web3 game can compete with MiWaiLaway titles on quality and fun, while also offering the added benefits of blockchain technology. The success of Shrapnel's early access could set a new standard for the entire play-to-own genre. In the regulatory landscape, things are heating up in Europe. Lawmakers yesterday held a key debate on the implementation of the MiCA, or Markets in Crypto Assets regulation. This is the comprehensive legal framework for crypto across the European Union. The discussion focused on the finer details, particularly around stablecoins and the licensing requirements for crypto asset service providers. Unlike the situation in the US, Europe is providing a much clearer rulebook for the industry. This regulatory clarity is expected to attract more crypto businesses to the region, as they'll know exactly what rules they need to follow. The progress on MyCA is a positive sign for the global crypto industry, showing that major economies are working to create stable and predictable environments for innovation. Let's circle back to Bitcoin for a moment, but this time, let's talk about ordinals. The inscription craze, which allows for NFT-like assets to be created on the Bitcoin blockchain, is still going strong. Yesterday, a new protocol update called Runes was proposed by Casey Rodarmore, the original creator of ordinals. This new proposal aims to create a more efficient standard for fungible tokens, or meme coins, on Bitcoin, without clogging up the network as much as the current BRC-20 standard. The technical details are complex, but the community's reaction has been overwhelmingly positive. This could open up a whole new wave of experimentation and development on the world's oldest and most secure blockchain, proving that there's still plenty of innovation happening on Bitcoin itself. Finally, in a piece of security news, a popular decentralized finance, or DeFi, protocol on the Phantom network suffered an exploit yesterday. Hackers managed to drain several $1 million from one of its lending pools by exploiting a vulnerability in a newly updated smart contract. The team behind the protocol immediately paused the contracts and is working with security firms to trace the funds and patch the vulnerability. This is another tough reminder of the risks involved in the DeFi space. Always do your own research, never invest more than you're willing to lose, and be cautious with brand new, unaudited protocols. The developers have promised a post-mortem report and are exploring options for compensating the affected users. It's a difficult lesson, but one that highlights the ongoing importance of security audits and robust testing in Web3. And that's a wrap on the biggest Web3 news from yesterday. From the historic approval of Bitcoin ETFs to major tech upgrades, new gaming milestones, and the ever-present regulatory discussions, the space never stops moving. It's an exciting time to be involved, and we're here to keep you informed every step of the way. What story are you most excited about? Let me know in the comments below. Thanks for tuning in, and if you found this update helpful, make sure to hit that like button and subscribe for your daily dose of crypto news. See you tomorrow.